Coming up today, stocks stage a big bounce on the back of positive tariff news. Yields jump on good economic data. Financial media still bearish. How to invest in Boston Dynamics. And did we just see a generational low in Tesla up over 11%? It's going to be a good week, guys. Let's go. And wow, look at that. We finally got a good Monday for a change this year. Bright green across the screen. Bit of a face ripper rally. Risk on, growth-led assets. Tesla up almost 12% today. Looks like we did get the waltz bottom. I'll get more into that later on, but it was definitely a rotation into growth here today. A little bit of softness in the defensive sectors. And like I've been saying for the last couple of weeks, the market was in the process of forming a low, which to my eye looks pretty much confirmed here today. Really good push up through last week's high as we just had a big triple witching OPEX on Friday there. My S&P 500 oscillator now going back above 50 after getting deeply oversold. That's a bullish signal. And it looks like my risk on off indicator nailed the low as well, shading the chart back in green. The day after the low was put in, just above 5,500 here on the S&P 500 index, which I'd say are good odds. That was the low in this correction. And a really nice push up there today for the Magnificent 7. Tech and growth shares leading the charge higher today. And stick with me because later on in this video, I'll show you a very little known stock that can give you exposure to one of the most promising robotics companies in the world, Boston Dynamics. But first, just looking at some key markets and the headlines we're getting out there today, and why I'm confident we've seen the low, at least for now. Still possible we could come and retest later on in Q2, but we've just had a massive volatility crush. And like I said back on this day, volatility quite often peaks out before the market bottoms out. And so volatility actually peaked out on the 10th, but the market bottomed out on the 13th. Volatility had already started turning down. And with today's big crush, we're well and truly got the volatility term structure back into a normal state of contango. Front month fixed futures have made that move below second month. And so that's kind of the confirmation I was waiting for. Also seen some positive signs in growth spreads. Discretionary stocks versus staple. Really good push higher here today, 3.3%. Along with high beta versus low volatility shares. Breaking out to a multi-week high here. Proving today was a really strong risk on move. And we've just managed to climb out of the extreme fear zone for the first time in weeks. Just by a few points though. Still at 28 here. Will be interesting to see the next AAII investor sentiment survey we get this week. Would be expecting at least a bit of a jump in these really low bullish readings we've been getting. And I'll be looking to see if we can crack underneath that 55% level on the bearish reading, as we're just coming off some of the most pessimistic and bearish sentiment we've seen in the market for a long time. And are we once again following seasonality, having a pullback in February, early March into a stronger late March going into April? Because like I'd been saying last week, the market was likely to have a big rip on the upside should we get any positive developments on tariffs, which we did today. As we kind of go into that D-Day, April 2nd next week, when official reciprocal tariffs were set to kick off, could potentially be signs of last minute deals getting done. If not, things getting shuffled and pushed back a bit, coming from both sides of the pond. And there's a look at the states' trading partners, who they have the biggest trade deficits with. The ones really in focus: China, European Union, and Mexico. And so we got news that the White House will hold off for now on broader sectorial tariffs, targeting all imports in industries like automobiles, chips, and pharmaceutical, tampering down expectations. As like I've been saying all along, these are negotiating tools that the president can tinker with as he sees fit. Like I said, we've still got the White House put. We may have even seen it come into effect today, getting some positive developments on this. Once again, letting us know they can just as easily be dialed back as they can be put on. And I think the end result is the state's major trading partners lowering their tariffs on US goods, leveling the playing field for the states, in addition to, I think, eventually global tariffs as a whole come down and could end up actually really opening up global trade. As we got news, the EU trade chiefs coming to meet with the new admin this week. There's potential for some last minute deals. Things get extended, shuffled around, and who knows, we could even get big official blockbuster new trade deals that will end up being better for the European Union than what's otherwise coming for them. And of course, no new big trade deals won't be done unless it levels the playing field, more so for the states. On top of that, we had some positive economic data come out today that gave treasury yields and a dollar a bit of a boost. That was the services PMI coming in better than expected, still holding up really well there in expansion territory. And people seem to forget that small business optimism has been continuing to grow ever since October. And a sharp uptrend this last year. In fact, looking back over the last 10 years, this looks to have done a big rounded bottom. Small businesses are optimistic about what's around the corner. Of course, you don't really hear this reported on much in the mainstream media. And hence why you guys tune into a channel like this, Click Capital, to get the raw data, because I tell it how it is. I don't really care if I upset a few people. My goal is just to get to the truth of what's really happening and what's really driving markets. Not just the narratives and desires from a a lot of journalists and economists as well. Because AI is still driving this boom. Just looking at this chart here of AI adoption by firms. No surprise to see IT at the front, but just looking in the light blue, that was the percentage of firms that have adopted AI back in October 23. Fast forward not quite 18 months, a year and a half, some of these sectors have more than doubled the percentage of firms adopting AI, and that's set to accelerate over the next 6 months here in the clear box. Big structural change in how business is done. And like I'd been saying last week, technically, big funds were set to buy stocks this week and sell bonds due to the huge move we've had over the last 6 weeks, with the yield differential moving strongly in favor of stocks. And so there's a look at the 2-year government bond yield. Nice green candle there today, with TLT, long dated treasury bond ETF, coming off, and the dollar seeming to find some support here as well. Whilst high yield bonds have reclaimed their 50-day VWAP, and another good sign we've got going on here. But the financial media by far and large is not buying it. I struggled to find a bullish article out there today. In fact, even after today's price action, we're still getting plenty of negative headlines. In fact, some claiming now delaying some tariffs. Risks making matters worse. We can't seem to win here. No delay or delay. Who's the biggest loser from tariffs? Apparently the US, somehow. The everything rally is back, but only for now. Another one, peak uncertainty on tariffs still looms over the stock market despite Monday's bounce. Another one from today, why the rally won't last, and it goes on and on. These are headlines from today. So fear, uncertainty, and doubt, FUD, still plenty of it out there. With still a narrative that investors would be wise to pivot to Europe out of US stocks. But looking at the price action today of American versus European stocks, we may have just broken out above this strong downtrend we've had. Bit of a good bounce we had there today of what again looks to be a bottom put in last week. It's also good to see a face ripping rally in Tesla today, having its best day in months. Got a lot of positive developments. Full self-driving in China. Getting news from Tesla dealerships, the ones that haven't been burned down by lunatics at least, that the phones are ringing off the hook. Demand is up. A lot of people wanting to come out and support Tesla, buy a new EV, or invest in the stock. Coming at a time of peak hate for Tesla and Elon Musk. In fact, subreddit Elon Musk hate just over this weekend, a big building narrative and discussions from the haters trying to target the stock. In fact, this one post I saw here instructing people how you can bet against Tesla by opening a brokerage account, depositing as much as you can, and buying the June $100 puts. Also saying buying as many contracts as you can. And whilst that's perfectly legal for anybody who wants to do that, burning Teslas, dealerships, and recharging stations is not. FBI has set up a new Tesla task force to go after these people. And there's a look at the move today. Look at that big, beautiful green candle we've got going on here. Like I told you guys back on the 11th of March, I bought the dip at 220, and I was hoping to add more to my long-term position at $188 a share if we were to get down there. But like I said on Thursday, after we heard from would-be Vice President Tim Waltz trashing the stock, encouraging Tesla owners to deface their vehicles, I labeled it the Waltz bottom and said he may have just done it for us bulls and potentially given us an iconic bottom we can talk about for years. And who knows, we may not see that 220 level ever taken out again. As what's around the corner for Tesla is the most promising products I've ever seen for the company. They're going to help revolutionize society forever with robotics, just speaking about the robo-taxi and the Optimus Bot humanoid with first generations currently being produced as I speak. And so it doesn't look like it, but the stock price is already up almost 30% off lows. When this stock moves, it can move fast. And so congrats to all the bulls and believers that recently bought the dip like I did. We may have just got our last chance to reload in the 220s. As Tim Waltz quoted it at 225 and dropping, he said, he literally printed the low. So a big shout out and thanks to him, along with all the other haters helping to drive more attention for this company. It's much appreciated. Also getting some good moves looking across the rest of mega cap tech, Nvidia floating with crossing its 50-day VWAP as well, but a few of them still have a bit more work to do. Alphabet still a bit below its 50-day VWAP, Amazon as well, and Meta could still be in the early stages of a recovery here. But we are getting some good moves in the chips. There's AMD putting in its strongest candle for months. In fact, this is the first candle above the 50-day VWAP since October last year. Did we just see the bottom on AMD as well? Also having a really good day was the ETF I invested in last week that I shared with you guys. The Entrepreneur Shares Private Public Crossover ETF with its largest position in SpaceX, up about 3% today. And just a few follow-up thoughts on this. Something I get accused of every time I seem to profile a new investment I've made and share with you guys. Was I paid to discuss this or promote this ETF by Entrepreneur Shares? Me or Click Capital? The answer is no. I never have and I never will accept payment to talk about a stock, to talk about a broker, as I believe that's unethical. The few times I've been offered, I've told the promoter where to go, but I understand how some people can think this because it's actually quite common with financial YouTubers. Guys like Meet Kevin who used to promote FTX and many other YouTubers out there who get paid to promote penny stocks, who get paid to promote brokers. I will never do that to you guys. Just like the services I offer on my website, the stuff that I really talk about and present in these videos is stuff that I'm actually investing in and things that I'm doing myself. I would never promote a stock that I'm not invested in myself. And it's kind of strange, really, how all these financial YouTubers never actually talk about stocks they're invested in themselves. Almost just like they make videos and don't really actually trade or invest. But anyway, kind of reminds me of the same thing when I first made a video about Tiger Brokers back in Q2 last year when it was trading down in the threes. I made an investment in it, presented my bullish thesis, but I was accused back then of also being paid to promote the stock, which I wasn't. And I'm still long here today. I still think it has way more upside than downside. Like I said, I'm a long-term investor in this fund because I want exposure to SpaceX, at least until it IPOs, which could still be a few years away, but I really like the underlying strategy anyway, as they've created their own proprietary entrepreneur factor to identify the most entrepreneurial companies to invest in and rather concentrated for an ETF, which I like. Got 32 holdings, and honestly, if I was to create an ETF myself, say a Click Capital ETF, it would look pretty similar to this with very similar holdings. And what I call global digital platforms, DoorDash, Airbnb, Robinhood, DraftKings. These are exceptional businesses in my opinion, and focusing on companies that are really innovative, run by entrepreneurs. That's kind of where all wealth comes from to begin with. Entrepreneurs create wealth, and the rest of us kind of use and enjoy the technology and products they create. The government helps spend that wealth. So in my opinion, investing in an ETF like this just takes you to the heart of where wealth is created in the first place. And like I said, I'm not paid anything to mention this ETF. It makes no difference to me whether you're invested in it or not. I'm just sharing with you my bullish thesis for investing in it because you guys have let me know you appreciate this type of content. Instead of doing like others who like to play it safe and sit on the fence and say the market may go up, the market may go down, and don't really share with you what they're actually investing in. And speaking of which, we got a good rip in robotics shares today. Rich Tech reclaiming its 50-day VWAP, up 15%. Along with good rips across many other themed categories. Small cap growth here. But like I said, we're still only getting green shoots off a probable low. Still plenty of work to be done. Many stocks still well off their highs here. But we are getting some good green candles along in quantum stocks today. And that one I said last week was primed to rip. Tempus AI, healthcare stock. Palantir also reclaiming its 50-day and just getting some signs of potential lows being made across the board here. But Bitcoin still yet to reclaim its 50-day. We've just had a massive washout in high beta growth over the last month and a half. But just moving on to another big deal that got announced today. South Korean company Hyundai announcing a $20 billion investment in the States, planning to build a steel mill in Louisiana to support more auto production. And this is what tariffs do. They incentivize companies, both domestically and abroad, to build in the States. This has completely been ignored by the market because the US is still the biggest market for a lot of these companies. And so this is a smart move for them. And like I said, it just brings more capital to the States, creates more jobs, better valuations, and the new admin, currently 2 months on the job, has already brought in $3 trillion plus in investment pledges. But somehow that's a bearish thing, according to a lot in the mainstream media. And speaking of Hyundai, they're actually the company that owns 80% of Boston Dynamics, which is a leading robotics company. They've been around for quite a few years now. I'm sure a few of you have seen their videos online from time to time. And so they're going to be big in factories, even in mining, and not so much humanoids, like where all the buzz is at the moment. And so this company's kind of been forgotten about a bit. Hyundai bought an 80% stake in it at $1.1 billion all the way back in December 2020. And I've looked around and I can't see much on its current valuation as it doesn't appear to have taken in any new financing recently. But just looking at similar early stage robotic companies, Figure AI did just do a financing round last month, coming in at almost $40 billion with their humanoids set to start working in factories soon. And so Hyundai actually trades over the counter in the States under ticker symbol HYMTF. Not a whole lot of liquidity. That's why you can see these big kind of moves up and down, pretty thinly traded. But I think this company is undervalued in my opinion because its total market cap is $34.5 billion. Dividend yield almost 10%. Apparently its price to earnings is only 3. And somewhere within that market cap is 80% of Boston Dynamics, which if that were to be spun off potentially in the coming years, could be worth $34 billion in itself. So it seems to me this stock is a reasonable valuation just for its underlying business of selling cars, and you get an exposure to Boston Dynamics for free. Once again, this is just my opinion. It's not financial advice. Please do your own research. And no, Hyundai did not pay me to say this, nor did Boston Dynamics, just to be clear. And also investing in OTC stocks comes with unique risks as well. But for now, us investors don't have too many options to get exposure to big robotic stocks apart from Tesla and other more traditional ones like Intuitive Surgical. There's a few small cap speculative names which could run up on nothing else than sediment. And if they were to get good fundamentals and revenue growth as well that would really light things up. But looking at other leading humanoids out there, Neo, Atlas, Figure, Iron, and a few others, they're yet to go public. So what that means, if we do get a big risk-on move with robotics, humanoids, the stocks that do offer exposure to that could get a lot of attention and investor buying, as many investors will no doubt rush to get exposure to this theme, especially when prices are breaking out on the upside, which we still have the ingredients for. We got all-time highs in investor participation thanks to smartphone trading apps all around the world, and no doubt that will be a little cyclical. However, I think we've witnessed a secular change, especially since 2020, in retail participation and especially in the options market. I don't think we'll ever go back below 30 million average contracts traded a day. Here in 2025, we're averaging over 55, 60 million. And I expect by 2030, we'll be averaging 100 million option contracts traded on average each day. I know I'm certainly doing a lot more options trading this year myself, thanks to volatility being made great again, and likely to remain so going forward for some time too. I've been actively selling out of the money weekly options, both puts and calls, which has actually been my most profitable strategy so far this year. As my long-only strategies are having a bit of a pullback, but are still outperforming key benchmarks since inception. And just looking at this chart here, from 2017, 2018, we went from about 12, 15 million contracts traded average per day to here above 60, about a 5x increase. But in that same period, SIBO, the home to options trading, stock price has only about doubled in that time. And this is one of these stocks I call a perennial winner, just a solid blue chip stock. Market cap 22.5 billion. And even throughout this market route, it actually broke out to brand new all-time highs this month. Because even in bear markets, but also high volatile markets, we can still get a lot of options trading volume, which is good for this stock. But just getting back to the market, good move on the Russell 2000 as well, coming off that sharp bullish divergence I identified last week, and the spider as well. Looking likely we did put in a low a week and a half ago. We got GDP coming this Thursday. Core PCE price index inflation February will be released this Friday morning. Economists are expecting a slight uptick from January's 2.6% year over year to 2.7%. And starting off this week, interest rate traders giving us about a 65% chance the Fed will cut in June. We'll see how this reacts after data we get out this week. But like I said, we're still technically in a soft landing. Inflation coming down, whilst economic growth and corporate EPS still continuing to grow, allowing the Fed to cut rates because they can, not because they have to. Really good spot for risk assets to be in. On top of the buzz for robotics, could really get things going later on this year once we're past all this tariff mess. And like I said, it can go both ways as well. Because as of last week, it seemed to me like a foregone conclusion that tariffs are going to cause us a recession. And that's why I made the point, what happens if they don't? What happens if Tim Waltz is wrong? What happens if all the haters can't destroy Tesla? What happens if robotaxi really takes off when it gets launched in a couple of months? So I continue to remain bullish and optimistic. I think there's more good things happening than bad. And if you feel the same way, you're welcome to support this channel by clicking that like button or subscribing, and we'll keep focusing on what's good and the opportunities around here. That's all to get you started this week. I'm sure we've got plenty more interesting news and movements coming for the rest of this week. So make sure you stay tuned in with Click Capital, and I'll keep you updated on everything. Otherwise, I'll see you back here this time tomorrow. Cheers.